perspective, what do investors in Asia expect from Fed Chairman Ben Bernanke today? Well, joining us from Hong Kong is Geoff Lewis. He's from JPMorgan Asset Management. He's head of investment services there. Great to see you, Geoff. So what do you think we're going to hear from Bernanke?
Well, I think he, as has just been said, he'll set out what available options the Fed has. They're fairly limited. I don't think there'll be any major policy announcement. That's not the job of Jackson Hole. That's the job of the FOMC. If I was Bernanke, I would be saying, hey, look, you can't rely just on monetary policy. This is not the time to be engaging in a 2% of GDP fiscal contraction next year with the economy so weak. If I was him, I'd throw it back on fiscal policy a little.
But fiscal policy really doesn't look very promising, does it? It doesn't look like Congress could possibly contemplate spending more money, or that they would.
Well, I think that's been the problem of this disagreement between the Obama administration and the Republican opposition. It has narrowed the policy flexibility for fiscal policy, and any sort of attempt to delay fiscal contraction now seems to be off the agenda. And with the economy seen to be weakening and the chances of recession increasing much more than we thought a couple of months back, that narrowing of the fiscal flexibility purely on account of the politics is not looking terribly sensible, in my view.
Is there anything to be said for taking the pain that there's going to be by reducing the deficit in the States and getting through this?
In terms of taking the pain, as Joseph Stiglitz said, I think, at the end of 2008, we were on the edge of the precipice and we looked into the abyss. Taking the pain could lead to the 1930s again. I think that is exactly the wrong thing to do at this point.
So would you agree that with Michael Spence, who we've just been speaking to, that there is a 50% chance that we could see a return to recession globally?
I think there are a number of different recession indicators. They tend to be pointing in different directions at the moment. One which has had a very good historical track record is the Chicago Fed National Activity Index, and that is right on the minus 0.7% threshold. This was based on the pioneering work of Mark Watson and James Stock. But another one that I like to look at is Professor James Hamilton's recession predictor, which only looks at the past history of GDP. That's still on a 14% chance.
So that's not a huge chance. What's happening in Asia? I mean, you suggest buying into Asian equities at the moment, but they seem to be getting dragged down with the U.S. and Europe at the moment. When are we going to see them break away?
Well, I think they are being dragged down. Certainly, Asia's economic outlook has also worsened at the margin because of what's happening in the US and Europe. But nevertheless, the relative fundamentals are still stronger here. So as in any deep panic when global investor risk aversion increases dramatically, and this has been a deep panic, as Credit Suisse put it, then all risk assets tend to go down together, and correlations both across asset classes and within asset classes telescope degeneratively towards unity. But I think when the smoke clears a bit, even if the US is in almost a zero growth mode and Europe is very sluggish, then the money will come back to Asian equities because this is where the growth is.
All right, we'll have to leave it there. Thank you very much, Geoff Lewis there from JPMorgan Asset Management.